Periscope, T.I. Crandall here with Credit Suite. Today we're diving into where the business credit reporting agencies actually get your data, where they get the information that they put on your credit report, and how you can control the data they have. It's pretty cool. Business credit reports are a little bit different than consumer credit reports because you can actually control some of the data they have that calculates into particular scores that they actually offer. So today that's what we're going to be talking about, because when you're building business credit, Jazzy D, welcome, thanks for coming in. When you're building business credit, what's on your business credit report is really, really important. More important than anything on your consumer credit report, and here's why. Consumer credit, pretty much anytime you go to apply for credit, you can pretty much be assured that that credit's going to report on your consumer credit reports. That's not the case in the business world. As a matter of fact, over 97% of trade vendors don't report the credit to the business credit reporting agencies. So you have to be really conscientious of what does appear on your actual commercial credit reports. The good news is there's a lot of this data you can control, and we're going to talk about that today. We're going to talk about where the reporting agencies are getting your information to put on your reports, and the stuff that you can control that goes on your credit reports that affects your scores, and how to actually control that to make that happen. So let's go ahead and dive in. Today we're talking about where the credit reporting agencies get your data. So what we're talking about, of course, here is business credit, right? We're talking about business credit where this is reporting on your business credit report. And thank you very much, A Virtuous Drea. I think I said that right. Thank you very much for inviting people. That was cool. Okay, so with business credit, we're talking about, of course, the credit that's independent of the owner's credit history. This is corporate credit, okay? So credit reporting agencies are using what's called objective data points to understand risk, right? That's what business credit is all about. That's what credit's all about, is they're getting data that helps lenders and credit issuers determine risk. That's what all this data they're getting is designed to do. So let's talk a little bit about where they're getting the data. Well, first, what you need to know is that the data we're going to talk about today is weighted different for specific purposes. So all this information has a little bit of a different weight compared to each other as we get into the scores. So the first thing that they're going to check is public records. Now, public records we're used to with consumer credit being bankruptcies and judgments and liens. It's the same thing here. So with corporate credit, they're looking at public records to determine if the business has any bankruptcies, the business has liens, the business has judgments, and they're checking court documents to get this. They're checking the filing dates, the resolutions, the closing dates, okay? But what they're also doing is they're checking to see if you are in a lawsuit now, whether you are being sued or whether you are suing another company. This is very new to us. Okay, in the consumer world, we're not used to lawsuits being on credit reports. But in the commercial world, if you are part of a lawsuit and it shows up as part of public records, the reporting agencies will absolutely, without a doubt, show this on your business credit reports. So public record information, big LLC, welcome, thanks for coming in. So bankruptcies, liens, judgments, bank or lawsuits, all this will show on your commercial credit reports. So IRS information, tax lien filings in places like counties, business entity information, a lot of this stuff will come from the IRS. So anything to do with tax liens or things that you owe the IRS can easily show up on your commercial credit reports. Okay, voluntary reporting by creditors. So the Experian, Equifax, DNB, they strongly suggest that companies do report to them, but in the consumer world, a lot of it's mandated. In the commercial world, it's not. Okay, so does anyone know if National Pen reports? No, National Pen is not reporting that I know of, and we recently checked into that. So even though they strongly suggest companies report, it doesn't mean that they do. As a matter of fact, guys, I got to tell you, part of the reason that people don't report to the reporting agencies is that they make it extremely difficult to report. I don't know why. So for example, we tried to report to them and they won't let us report because they say we're a consumer credit repair company, even though all we deal with is corporate credit and loans. We don't even deal with consumers. And we've sent several people to Experian to try to report that do SEO, that do websites, that do all types of things. And they put them through this extremely difficult process to get data reported. So I don't know why the reporting agencies make their money by collecting and selling data. But even though the reporting agencies people do report to them, they make it very difficult to do so. Corey, welcome. I have a question. Been running into a problem with wholesale. They're telling me I need a face front. Who's telling you that you need a face front? Let's start there because I'm not sure exactly who they is. So they do suggest, but again, a lot of times, a lot of the credit doesn't actually report. So the borrower may pay faster for better scores if the accounts actually do report, but a lot of them don't. But if you do have accounts that report, then pay those early because that's really the way to get good scores, okay? It's also important to note that if you're overextended or anything changes on your commercial credit report, the reporting agencies sell it as a benefit that they can be alerted. So you need to keep this in mind because anybody that's monitoring your business credit reports can get these alerts and pull back credit even if you weren't late with them, but you were late with another credit issuer. So something to keep in mind. Now, what we're going to talk about now is very important because this is all stuff you can control that gets put on your business credit reports. So one is self-reporting by borrowers. Basically, what you're putting on an application, your industry classification, your time in business, your number of employees. When you fill out applications for loans or credit, a lot of this information is what gets put on your business credit report. Even the DUNS number you supply. Now you have to be careful because if you're using different physical locations when you apply, D&B can actually populate a separate address for you under a separate DUNS number. Guys, this actually us. So we actually had two DUNS numbers that we just had to condense into one because somebody had reported the information to Experian with a mailing address that we had. We had to contact D&B and say, no, we're actually one address. Add that address to our file. So the data you put on loan applications, on credit applications, gets supplied to the business credit reporting agencies. Dima, welcome. First day on Periscope. So here's why this is very, very, very important. Because what happens is if the information you put is incorrect or incongruent on applications from what you're putting on an actual application from what you've applied for in the past, what you've applied for in the past is on your credit reports. This is why I recommend you pull Experian, pull D&B, and pull Equifax and make sure the data on there is important. Corey says, people who sell wholesale items for my fish business. Okay, so give me the question again in full context so I can directly answer it. Hi, Dima, thanks for coming in. So again, what you put on applications for credited loans can appear on your credit reports. This is why you want to check your credit reports regularly and question anything that's on there. We had a weird thing. On our commercial credit report, they showed a vice president of our company that wasn't even a vice president. But here's what's interesting. They get the information from Secretary of State. When we disputed the information, they denied it was even on the credit report, even though it was. So we had to then dispute it again, sending them the physical credit report. When we called to try to dispute it by phone, they said, well, that's provided by your credit issuers, so we can't actually remove that from your report, even though I know I get it from them. So this is why you want to keep an eye on your credit reports and dispute any inaccurate information. A big LLC says, I have two of my accounts at $7,500. Great. I do have to max out all my accounts to get higher. You don't have to, but again, you need to keep applying for more credit. As your limits go up and the recent amount that you've used go up, the more credit you get, the higher the limits will be. So keep applying for more credit and keep checking your credit reports to make sure that the recent amount of high credit limit you've used that's the key to getting that $10,000 limit account you're looking for. So this is very important. D&B and all reporting agencies have their own score. D&B calls it a D&B rating. And it's based on the financial strength of your business. Chasing Andrew Jackson, welcome, man. Haven't seen you in a while. So it's based on the financial strength of your business. It has to do with the net worth of your business. Okay, it basically has to do with revenue and what's actually there. So what happens is you can actually have a low rating here or a different rating, whether they have the information or not. Here, what this looks like on real commercial credit reports. I'm not pulling any. I'm going to pull some examples and actually physically show you what this looks like. So here's what you need to know. D&B, Equifax, and Experian have a score that's just based on the financial health of your company. And whether or not where you are, the category that they put you in is based on the information they do or don't have. So if they don't have your revenue information, for example, then they'll put you into a different category than if they did have your revenue information. So you can control this. You can control the category you're in just based on the information that they have. Here, I'll show you. Credit report. You can see here with Experian, this is with Experian, you can see right here that they have the sales totals here. Experian has the actual sales totals right here. We can also see they have the SIC code information here as well. Now here's a look at another commercial credit report that's blank. They don't have any of that information. Here's another one where we can see they have the SIC codes, but you see there's no sales data here. Here's another one where we've got SIC code, but no sales data. Okay, so again, what we're looking at, here's no sales data. Here's one with sales data. Here's what you need to know. You control this. You can decide if you want to send them your tax returns, and your tax returns will then put the sales on your credit report. And then by putting it on your credit report, then what else will happen here is this will actually give you a different category of when it comes to, for example, the DMB rating. So DMB says this. DMB says, look, here's the deal. If we know, this is how DMB works. They either have your employees and revenue, or they have one or the other, or they have none. Based on that, they determine the category of your DMB rating you go in. You're in one category if they have your employees and your revenue. You're in another category if they only have your employees and not your revenue. And you're in a third category if they don't know your employees and they don't know your revenue. Let's think about what this means. What DMB is saying is, if you have tax returns and they're good, send them to us. We'll categorize you even at a better rating and give you a better score because we know your financial data and we'll put it on your report. If we don't have that, we're going to pull Secretary of State records and we're going to base your business size based on the number of employees you have. We're going to determine your financial worthiness based on how many people you have. So if you're a solopreneur, one person, two person organization, you're going to score lower just because they see you as a higher financial risk because they're seeing that you're small because you don't have very many employees. So how do you fix this? You get your tax returns if they're good. They show increasing revenues and profits. Send them to DMB, Equifax, and Experian. By sending their data there, you can basically file an update with all three of them. Dun & Bradstreet, it's called iUpdate. Experian and Equifax, you have to get credit monitoring. And then you basically go to update the information on your credit report. You send them your tax returns. They'll put the sales data on your credit report. So somebody that shows $802,000 in sales like I just showed you has a much better chance of getting financing in a lot of cases than somebody that shows no sales data on there. Plus, they'll have a higher DMB rating and they'll be put into a category with Dun & Bradstreet that indicates that DMB has a lot of information to determine the financial worth of the business. So it actually helps you a lot. You can control what's on your credit report. You control if the sales data is on there based on whether or not you supply the actual tax returns to them. If you don't supply it, be careful, because if they have your Secretary of State data and if you filed an annual report, they'll look at your employee count as your actual size, and then based on that, they'll score you lower with the DMB rating if you have few employees. And it's not just DMB, Equifax, Experian all have a similar. Important here, these ratings are based on your financial strength using employee and revenue data if they have it, if not just employee data. So if you have good returns, send the returns to the reporting agencies. It'll then show on your commercial credit report. Shared data. This is payment data where accounts are non-reporting vendors can give trade references. These are called trade references, okay? So what can happen is you can actually supply trade references when you apply for accounts, and then those could actually show up on your report as well. So using trade references, that's something you can control on your report as well. UCC filing. This is where you actually are getting a loan, basically. What happens is the lender is filing what's called a UCC filing on your actual credit report. There's another thing you really need to know. When you talk to a lender and you ask him, and I'm going to show you this. So if you see my eyes glance away, it's because I'm looking at some commercial credit reports to find you an example here. If you come in and you actually if you talk to a credit issuer and they say that they do report to the business credit reporting agencies or a lender, you must ask, do you report my trade information, my payment data, yes or no? And here's why. A lender may tell you that they report to the business credit reporting agencies, but unfortunately, Oh, I didn't see what you just said. If I missed that, somebody said sorry. So if I didn't address it, let me apologize because I didn't see it. So if a lender tells you, yes, I report to the business credit reporting agencies, you have to be careful because 1, they may only report if you default. 2, they may only report that you have a loan called a UCC filing. Or 3, they may actually report the trade line, which gives you credit in your score for making the payments. If they only file a loan that you have a loan, it's a UCC filing, or only report you if you have a collection, that's not going to help your score. But if they actually will report your payment history, that will affect your score. So you need to know this. Here, I'll show you. For example, what UCC filings look like on credit reports. You can see right here that this person has a UCC filing right here. We can see. So they have a Uniform Commercial Code or UCC filings, and this is basically indicating that the person has an outstanding loan. So this tells other credit issuers and other lenders that you have an outstanding loan. So again, I might show you this. Another view as well. So the important thing to learn from this is that when you're dealing with lenders, and you see me looking away here because I'm going to show you another example of this. The important thing to know here is that when you're dealing with lenders and they tell you they do report to the reporting agencies, you need to ask them, what do you report? Are you reporting my payment history, yes or no? If they say no, that probably means they're only going to report on your credit report if you default, or they may only report that you have a loan, which is called a UCC filing. So you should know the difference there. So you make sure that when you ask them what is reporting, you know if it's an actual account reporting or if they're just putting things on there, for example, such as UCC filings. I'll show you another. For example, is a UCC filing. You can see here, Secretary of State, California, Secretary of State, California, and you can see the actual data. Now this, I'm looking at Pixar's Business Credit Report, which is why Screen Actors Guild is on there, which I always thought Screen Actors Guild was what it was called, but apparently maybe not. So this is, you can see here what Secretary of State records look like right here, and then you can also see what they look like here on an Experian report here with this view as well. Ask lenders, do you report to business credit reporting agencies? Yes. What do you report? Do you report my payment history? Yes or no? It's an important question. Collection filings, okay? Collection agencies will also give data to the reporting agencies as well. So again, you need to make sure that you know this because when you look at credit reports, as we've seen, when we look at commercial credit reports don't tell you credit issuers' names, right? They just tell you categories. Bank card, credit card, equipment lease, transportation. They don't tell you the name of the credit issuer or lender reporting, only a category. So you need to be very careful here because collection data will show. Now what's interesting is that in a lot of cases, collection companies will notify you they're going to report before they do it. They use it as a way to get paid. So if you have a collection company notifying you they're going to report, it might make sense for you to settle that debt so they don't put it on your business credit report. Federal government, okay, company grants, loans that they give, okay, debarment, exclusion from items of contract. So when you commit fraud, when you do things with the federal government, that can actually be reported too. Fraud cases, liens that they have against you, grants they've issued, loans like SBA that are SBA guaranteed. Those kind of things can report on your credit report too. Maybe they'll show as an actual account here by a credit issuer. Maybe they'll show as a UCC filing, but you need to know that. If they do, how long does it take to be removed? A collection? Well, it depends on the reporting agency. To be honest with you, all of them are completely different. The reporting agencies are really weird with this. So consumer reporting agencies, we're used to 7 years for debts after the first date of default is what they call it, or the last time you made a payment, or 10 years for public records. The reporting agencies are way different. Every kind of account can stay on every credit report for a different period of time, including different for all the reporting agencies. So it could be on there for 10 years or more, but if you have something negative on your credit report, here's what you do. Go to creditsuite.com/reports. Do a free search to see if anything's reporting with these three. If it is, get a report and see if it's negative. If it's negative, for a business. So if it's negative, with Dun & Bradstreet, use Dun & Bradstreet's service called iUpdate to update the information. With Equifax and Experian lets you dispute online. Equifax will give you a phone number you have to call. They send you a data request form. The data request form has to be mailed and emailed to them with the information you're disputing. If you're disputing with the reporting agencies, chances are good you can get the item deleted, but you need to know that usually the collection companies are going to warn you before they collect. Go ahead. If they're telling you they're going to report, it probably makes so you don't have something as negative on there. Okay, so hopefully that answers the question. They get information for press releases, news sources, online, offline, the media. They get it from Yellow Pages, online, offline, anywhere your business is listed, okay? So think about this. When I come here and talk about step 1 of building business credit, one of the biggest things I talk about is congruency. You've got to make sure that all the information is the correct information. So your business name, your business address, that it's all exactly the same everywhere online. 411, Yellow Pages, big. You hear me talk about this all the time. Well, here's why. Because the reporting agencies will pull data from these directories. So you don't want them to put false addresses, false names, false officers on your credit report, which oftentimes happens. So you need to make sure the Yellow Pages, Bing, Yahoo, Bing, Yahoo, Google, they all have the correct information. Business registrations, this comes from your Secretary of State, okay? It can come from city, county, courts, all kinds of things, but this usually comes from your Secretary of State. So here's the kicker. Very, very important. I'm going to show you why. I'll show you right now why it's important. So here's what it is. You've probably heard me say before, if you've come on here before, that you can have a bad credit score even if you have no credit. And the reason for that is because they're pulling data from the Secretary of State. I'm going to almost try to see if I can pull up an example here, which I know I can. And I'll show you what this looks like. So let me pull up a credit report here, and I'll show you what a credit report with no credit looks like. So we see here somebody has a 27 score. We see they're considered to be high or medium risk. And we see here that they have absolute, oh no, this person does have credit reporting. So that's a bad example. Okay, up another example. And what I'm going to do is I'm trying to look for somebody that has absolutely no credit on their business credit report so I can show you what this looks like, which is weird. Okay, maybe, oh, I know why I got it. Okay, give me a second here. I got it. Boom, 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 boom. There you go. Okay, so let me show you. Here we go. Take 2. Here we go. Okay, so has no credit on their credit report. $1,000 limit, $28 IntelliScore. Or $28, 28 IntelliScore. We can see here there's no credit. I can't scroll down anymore. We can see here they have no trade lines. Here's why they have a score at all. It's one thing that gives it right there. The SIC code. In order for Experian to populate a report like this and give you a failing score, they need to know your business name and address. They also need to know that your SIC code. They would never populate this unless they have the SIC code. So if they only knew your name and address, you would never have a commercial report. But what they need is what they call a piece of demographic information with his SIC code. They get the SIC code from your Secretary of State. So the Secretary of State data, you need to watch what you're doing here, because the Secretary of State data, if you have an SIC that you give them, that will populate a commercial credit report for you based on this. They also will report things like your industry, like the SIC, which is what SIC is, and other data as well. So something to keep in mind. So again, filings for your business with the state Secretary of State, that is where they get a lot of data from. Web mining, Google, Yelp, etc. Okay, they get data from all these places as well. So a lot of places the reporting agencies get your data. Public records, bankruptcies, judgments, liens, we're used to that. We're not used to lawsuits. Commercial credit reports absolutely will show in public records under lawsuits. IRS information, do you have anything like liens with the IRS? That will be reported. Remember, voluntary reporting by credit issuers. Anybody that reports to them, all that data gets on your credit report. Remember self-reporting, what you're putting on applications. The data that you put on applications, your time in business, your employees, your industry classification, your business name and address, that can get put on there as well. Don't forget, you can determine whether financial strength of your business on whether or not you send them tax returns. If they don't have your tax returns and they do have your Secretary of State filing information, they'll use employees to determine your rating instead of your financials. If they don't have either, then they'll give you a different kind of actual category of your rating. So you can control this. If you have good tax returns, submit them to the reporting agencies. That'll give you a better rating. If not, they're going to divert and they're going to come here and they're going to get information from the Secretary of State and employees to do that. Okay, trade reference data that you electively add onto the report. UCC filings, these are indicators by lenders saying that you've been issued a loan. It doesn't count towards your payment history. It just tells other people you have a loan. Collection filings from collection companies. They'll typically notify you before they report. If they notify you, see if you can settle it. If it gets reported, go to iUpdate, go to creditsuite.com/reports to get your act to do a free search to see if you have anything set up with them. If you do, pull a report. If it's negative, then DMB will let you dispute it through a service called iUpdate. Equifax and Experian will give you, of course, online through their credit monitoring to dispute that information. Federal government. Do you have grants, loans, liens? They report that. And then all kinds of other places. Yellow Pages, online, offline, press releases. Okay, Yelp, Google. All this can get on there. And of course, all the information from state, county, city reporting. Most importantly, the Secretary of State data will show on your credit reports as well. So the reporting agencies get your data. Credit issuers that report to them. Lenders that show payments. Your Secretary of State data. But Google, Bing, Yahoo, yes. This is why whatever your address is, your business name, your business phone number, you need to make sure it's congruent online. I use a service called Yext. Y-E-X-T. Yext cost me $500 a year for the business, and they make sure that all my listings are exactly the same online. It's important because I understand the importance of congruency with online reporting. So you can consider using a service like Yext as well. Just make sure that all your information is congruent online. Don't default on stuff. Your payments are based on how you pay. Okay, so if you pay on time, you get good scores. If you get notified by a collection company something can go into collections, make sure you try to settle that so it never gets put onto your credit report. And don't forget that if the Secretary of State, if you tell them your SIC code, the reporting agencies will get that data and they will populate a report and give you a failing score even if you have no credit. So a lot of information today about where the reporting agencies get your data. Hopefully that all makes sense and provides a ton of value. Next week, we're talking about 5 critical factors that determine your business credit worthiness and how these factors control your ability to get money to grow. So we're going to talk about 5 really important things that credit issuers and lenders are looking at to determine if you're worthy enough of a credit card or loan so you can make sure it's done. So Carmel Queen says, what's an SIC code? It's your industry code. And that's going to be next Wednesday at 4 o'clock. We're talking about the 5 critical factors that determine your credit worthiness to get loans and credit lines. And SIC is your industry code. It's what industry you're in. Big LLC 1 says, how can I find out how much I'm recommended for? You can pull your business credit report. If you go to Experian, DMB, and Equifax, you can pull your business credit report. It will tell you. I don't have the ability to pull those anymore because they think we're in an industry we're not. So I don't have the ability to pull those reports anymore. So an SIC code is your industry code. My advice to you is that you come in, go research SIC codes, pick the one you want to have, and that's the one you use whenever you apply for anything that asks for your SIC code. For us, for example, right? We understand financial services is high risk. Well, we're really a software company. So we found the SIC that fits best for pre-packaged software, and that's the SIC code we use whenever we apply for anything. I then went to the reporting agencies, told them what our SIC code was, so they put that on our credit reports. So we took diligent efforts to make sure that our credit reports reflect the SIC we want them to see. Okay, so that being said, it's very important. Research your industry. What SIC code are you? Know your SIC code. Whenever you apply for loans and credit that ask for your SIC, use the same SIC code. Okay, also you can go to the reporting agencies and give them your SIC code, so that will be what's on your credit report. That's exactly what we've done. We went to Experian. I just wrote them and actually updated our Experian credit report and said, hey, you guys don't have our SIC. Here's our SIC code. Please put that on our credit report, because I understand that having a high risk SIC will hurt our score, and maybe having a no SIC can adversely affect us, so I want them to have the red SIC code. So for all of you that are coming in late, go to Periscope. This is there indefinitely. We will be back next Wednesday at 4 o'clock Eastern to talk about 5 critical factors that affect your credit worthiness that will be used to determine if you should get approved or denied, how much you'll get approved for, and the rates and terms you pay when you apply for loans and credit. We'll be back here at Periscope, 4 o'clock Eastern next Wednesday. Thank you guys for the loves. Thank you for the shares. Thanks to those of you that's first day on Periscope that just joined us. It means a lot. I'll see you all next Wednesday at 4 o'clock Eastern. Thanks, everybody. Have a great day.